on Angellist with the syndicate, and then I moved into the rolling fund. I think the syndicate, from my experience, is best suited for kind of Series B and later investment opportunities, or kind of Series A and later, where the company's trying to raise a larger amount of money and you have time to close. There's three negative pieces to a syndicate deal that don't work well with the seed stage and are the number one reasons that I started the fund. The first one is my syndicate has 1,000 people in it, give or take.
Right.
And if I want to close an investment, I have to share the company's entire information with those 1,000 people in order to raise the money. And so that is a wide dispersion of information, right? And most seed stage founders, if they want to be operating kind of in stealth, or they don't want competitors or bigger groups to see that, the syndicate isn't the best place for that. The other thing is I never know exactly how much money that I'm going to be able to invest in a specific deal. And I never like to overpromise the founders and then underperform. So the way that I would always do it was, instead of saying, "Hi, founder, I want to invest 300 to 500,000 in your deal," and then only come to them with a 100K check that my LPs filled out, I would always start at 100,000 and go up from there. And I never knew exactly how much I was going to invest. And we just invested our largest amount ever that was announced this week in a company called OnRamp. And I started there with 100,000 allocation and ended up well over $1 million with just the interest that we had. So that's a negative thing when you're dealing with a syndicate, because I don't have certainty of closure. And the last thing is no matter how fast Angellist moves, which they're very good, or how fast I move, which I'm fast, or how fast the companies move, it still takes 2 weeks to close a syndicate deal, versus, with the rolling fund, I can, go in and write a check in a day if I really want to, right? Really fast, next day service. And Angellist has been amazing. And I think the one thing that, everybody, they have 25,000 or more already accredited investors. So you can go as a new syndicate or new fund and get access to that. I am one person. I cannot, speak to 25,000 people and have access to them for my fund. And I chose the rolling fund model for several reasons. Firstly, it's a good step from the syndicate to the fund model, because I get to raise money on a quarterly basis. So I don't have to go out and raise the entire fund amount day one. I get to raise on a quarterly basis. The other thing I get to do is my quarters close on the last day of the second month. So I can go out to my LP base and say, "Hey, these are the companies that I've invested in the first 2 months of this quarter. Do you want to join in this quarter?" And they can opt in or say, "No, thank you." And that provides them the same kind of thought as the syndicate. And then I have some institutional investors that were looking at me as a first-time fund manager. And one of the things they always said was, "Well, we want to see your track record." And the great thing about the rolling fund is, they can choose their commitment level, right? So if they want to say, "Chad, we're going to test you out for 4 quarters, for 1 year," they can do that, right? They can invest for 4 quarters and see the track record, see how I'm operating, and then make a longer commitment. If they want to do 1 quarter, they can do that, which from a traditional fund is impossible, right? The way a traditional fund works is that you raise the entire amount of money up front, you invest it over, the next 18 months. By the time you get to that 12-month period, you start raising your next new fund, and you're doing that off of, very little information. And so a lot of institutional investors don't look at emerging managers because they don't know how to get into that subset of information. But where I've been successful, at least explaining it to my institutional investors, and they would have never backed me if I did a traditional fund because I'm, a new manager, was like, hey, this allows you to come in and build a track record and build trust with me in real time. If you don't want to continue after a year, you don't have to. There's no commitment, and you get, economics and all the previous investments that you've done. And so for LPs, you pay for the flexibility, but it gives you the ability to, not have to take a 2 to 3 or 4 year bet with me. You can come in, you can say, okay, Chad, I'm going to test you out for a quarter. If we've never spoke before, you can say, I'm going to test you out for a quarter. You'll get to work with me for, the 3 months, see how I operate. And then you can say, okay, let's, new trial period is now a year. And that's something you can't do in the traditional model. And so that's exactly why I chose Angellist. And it's been, a good decision for me, even though, I'm a lawyer, I could have done it myself. I have access to every other fund management platform. I've invested in the best fund management platform in Europe, but the only difference with that one is I didn't have access to additional investor base, which you can't. It's hard to beat what Angellist has built there from the network effect perspective.